Hi friends. Welcome to Crypto Trader channel. In this video we are going to learn about how to identifying chart patterns with technical analysis. Before enter into the video, friends, subscribe my channel and give me a feedback in comments. What are the items going to discuss? Number 1, understanding patterns and their limits. Number 2, techniques for trading patterns. Number 3, construction of common chart patterns. Okay, let's see. Number 1, understanding patterns and their limits. Defining pattern. A pattern is bounded by at least two trend lines, straight or curved. All patterns have a combination of entry and exit points. Patterns can be continuation patterns or reversal patterns. Patterns are fractal, meaning that they can be seen in any charting period, weekly, daily, minute, etc. A pattern is not complete or activated until an actual breakout occurs. Traders always keep in mind with this. Some of our human tendencies can be dangerous for investors. See patterns where there aren't any. Believe, market law, technical and fundamental, without evidence. Look backwards rather than forward. Stick with original price targets of patterns after conditions have changed. Number 2. Techniques for trading patterns. Every trader should know this basis. What is breakouts? What is entry stops? What is protective stops? What is retracements? Breakout. Violation of trend line, support or resistance, or previous reversal point. It signifies that a change in buyer and seller behavior and signals the beginning or end of a trend. Next one, entry stops. Buy stop orders are used to enter trades once the price breaks out. Here we are seeing some example of breakout. Breakouts consist of two elements: false and failed breakouts. One is false breakout. Price breaks out but almost immediately returns back through its breakout price. Second is failed breakout. Trap false breakout occurs and the price then breaks out in the opposite direction. Here we are seeing some example of false and failed breakout. Next one, protective stops. Protects capital. Determines the amount of capital risk before entry. Types of placement. Filters, such as percent, points, or money. Trend line, support or resistance level with filter. See the example of protective stop. Next one, retracements. Counter trend correction types. Pullback on breakout down. Throwback on breakout up. Waiting for. Don't always occur. Performance can suffer when they do. See the example candlestick pattern of retracements. Number 3. Construction of common chart patterns. Chart pattern converted into three types. 1. Multi-bar pattern. 2nd. Candlestick pattern. 3rd. Short-term pattern. Multi-bar pattern contains horizontal congestion, double and triple tops bottoms, rectangles triangles, symmetrical, ascending and descending, wedges, other, head and shoulders, cup and handle. Candlestick pattern contains doji, harami, hanging man hammer, shooting star inverted hammer, engulfing, dark cloud piercing. Short-term pattern contains pennant, flag, gaps, pipe bottom, narrow range, horizontal congestion, double tops. Its characteristics: two successive peaks separated by an opposite reversal point. Either rounded or pointed peaks that are usually at roughly the same price. Resistance level: price must break out of middle reversal point. See the example of double top breakout down pattern and how to calculate the target price for support line and resistance line. Horizontal congestion, double bottoms. Its characteristics: two successive troughs separated by a peak. Either rounded or pointed troughs that are usually at roughly the same price. Support level: price must break out of middle peak. See the example of double bottom breakout up pattern and how to calculate the target price for support line and resistance line. Horizontal congestion. Triple top. Its characteristics. 3 distinct peaks at roughly the same price level separated by 2 intermittent troughs. Breakout occurs when price exceeds the extreme of the intermittent trough or a trend line connecting those points. See the example of triple top breakout down pattern and how to calculate the target price for support line and resistance line. Horizontal congestion. Triple bottom. Its characteristics. 3 distinct troughs at roughly the same price level separated by 2 intermittent peaks at any level. Breakout occurs when price exceeds the extreme of the intermittent peaks or a trend line connecting those points. Best performance may be after a sustained decline. An average performance, but watch for failure. See the example of triple bottom breakout up pattern and how to calculate the target price for support line and resistance line. Horizontal congestion. Rectangles. Its characteristics. Trading range with support and resistance levels bounding price action. Slight tilt, similar to horizontal channel. Often has many false breakouts. Things to consider. Confirm a breakout. Shortfall, often indicator of eventual breakout direction. Best occurrence may be bottom breaking upward. See the example of rectangle entry up breakout up pattern. And to calculate target price using candlestick. Triangles. Symmetrical. Its characteristics. Bounded by a downward sloping upper trend line and an upward sloping lower trend line. Each bound is a straight trend line. Prices must touch each bound at least twice. Many false breakouts. Moderately successful in performance. Things to consider. Confirm a breakout. Best occurrence may be upward. Breaking out above average for all patterns. See the example of triangle symmetrical breakout up pattern. And how to calculate target price using candlestick. Triangles. Ascending. Its characteristics. Bounded by a horizontal upper trend line and an upward sloping lower trend line. Each bound is a straight trend line. Prices can break in either direction, but more commonly upward. Breakout usually occurs in pattern. About average failure rates but many small false breakouts. Post-breakout performance average on upside but above average on downside. See the example of ascending triangles breakout down pattern. And how to calculate target price using candlestick. Triangles. Descending. Its characteristics. Bounded by 2 trend lines, the lower is horizontal and the upper slopes downward. Prices can break in either direction but most commonly downward. Above average performance on upside break, retracements occurs often. See the example of descending triangles breakout down pattern. And how to calculate target price using candlestick. Triangles. Wedges. Its characteristics. Bounded by 2 trend lines, each headed in the same direction, price must touch a trend line at least 5 times, 3 times on one and 2 times on the other before a breakout. Often occur following a panic declining wedge or bubble rising wedge. Performance in both types is below average, and retracements are very common. See the example of rising wedge breakout down from the climax peak pattern. And how to calculate target price using candlestick. Head and shoulders. Top. Its characteristics. 3 peaks with center peak higher than the other 2. Shoulders should be at approximately the same level and the head higher. Line connecting the 2 throughs between the peaks is called the neckline. Pattern is only complete on breaking the neckline. Target is the distance from the head to the neckline projected from the neckline. This is a standard pattern for tops and has one of the lowest failure rate. Here the example of head and shoulders top. Head and shoulders. Bottom. Its characteristics. Inverted but otherwise identical to a top pattern except not as profitable. Here the example of head and shoulders bottom breakout up. Cup and handle. Its characters. Pattern consists of a rounded bottom, not a V, bottom 2 lips at each end, and a handle, similar to a flag pattern from the handle. Pattern is complete with breakout above both lips. Often have a throwback. The pattern's performance ranks about average for bottom pattern. See candlestick pattern example of rounding bottom breakout up. Trading with patterns. To trade these patterns, simply place an order above or below the formation following the direction of the ongoing trend, of course. Then go for a target that's at least the size of the chart pattern for wedges and rectangles. For pennants, you can aim higher and target the height of the pennant's mast. See the picture of trade by using some patterns like rectangle, triangle, symmetrical, triangle, ascending, rising wedges. Best multi-bar patterns. Bullish signals indicated patterns, so traders should keep it in mind. Descending triangle. Rectangle. Pipe bottom. Bearish signals indicated patterns, so traders should keep it in mind. Flag. Head and shoulders top. Island reversal. General information about the candlestick. Traditionally, candlestick patterns are reversal patterns, meaning they are used to identify when a trend is ending. Candlestick patterns are often used with longer-term trends, thus, upward reversal patterns after a correction in a longer upward trend show the best performance, and vice versa for downward reversal patterns in a long downward trend. Be careful not to act on a perceived candle pattern until the pattern has formed and is activated by a breakout in a certain direction. Doji. Characteristics. A one-candle pattern formed when the open and close are the same price, and the high and low are roughly equidistant from the open and close. Extremely common. Indicates indecision in the marketplace and thus is a possible warning of price change. Harami. Characteristics. A two-candle pattern of a large body of either color followed by a small body of the opposite color. The second body is completely within the body of the large body and is called a spinning top. Although common belief is that the harami is a reversal pattern, many report that it has the potential of breaking either way. A variation that has a doji instead of a spinning top as the second candle has equally average performance and random breakout. Hanging man and hammer. Characteristics. One candle patterns differentiated by the color of the body. Each pattern has a high that coincides with either the opening or closing. Price. Hanging man, thought to be a continuation pattern, actually breaks in either direction randomly with a slight upward bias. Its overall performance is below average. Hammers occur relatively frequently but have small performance. Shooting star and inverted hammer. Characteristics. A one-candle inverted hanging man or hammer pattern. Hammers by themselves have white bodies and shooting stars have black bodies. As a one-candle pattern, the shooting star has average performance. The same is true for the single inverted hammer. Engulfing. Characteristics. A two-bar pattern in which the second bar body completely engulfs the first bar body. A bottom engulfing pattern, with a short black body followed by a tall white body, is thought to be an upward reversal pattern and actually has very good performance on a downward breakout in a downward trend. Dark cloud cover and piercing line. Characteristics. The dark cloud cover is a two-bar pattern where the second bar closes higher than the first and is black versus white in the first bar. The piercing line is the opposite of the dark cloud cover in that the second bar is white and lower than the first bar, which is black. The dark cloud is thought to be a downward reversing pattern. The piercing line pattern is thought to be an upward reversing pattern. Pennant, flag. Pennant and flag patterns are variations of the same pattern. These patterns are often preceded by a steep, sharp price change, up or down, and form a short consolidation that appears like a triangle or flag. Generally, the pattern slopes slightly in the direction opposite from the trend. The breakout in either direction is often followed by a move that equals the earlier steep, sharp price change into the pattern. Gaps. Characteristics. Definition: no trading gap at specific prices. Gaps can be considered up or down. Gaps are caused by appreciable changes in supply and demand from one close to the following open, gaps are generally profitable on breakouts from patterns, trends, support or resistance. A method of trading a gap is the explosion gap pivot. It assures that the gap is valid. After the gap, wait for throwback. If throwback covers the gap, no action. If the throwback stops, this is called the pivot low. Place buy entry above high of the gap bar. Pivot is the lowest level of the post-gap breakout. Protective stops initially placed at gap low and then below pilot low. 2-bar reversal button or pipe bottom. Characteristics. 2 bars and occurs at the end of a large trend, up or down trend. Ideally, the first bar in a bottom pattern closes at the low and the second bar closes in the upper half of the range. It is more reliable in weekly data. Bar ranges are larger than preceding bar ranges. Action occurs on breakout through second bar. Volatility patterns. Characteristics. Dull activity is known as low volatility. New trends often begin from periods of low volatility. One way to look at volatility is to observe the relationship between price bars. Range is the spread between high and low in a price bar. If a bar is followed by a bar with less range, volatility is declining. The second bar is called a narrow range bar. When the second bar's range is contained within the range of its preceding bar, it is called an inside bar. Narrow range. Characteristics. One low volatility pattern is called a narrow range pattern and consists of a bar with a range narrower than its preceding bars. The graph shows a 4-bar narrow range pattern NR4 with 4 bars, the fourth bar having a narrower range than the preceding 3 bars. The breakout occurs on a break above or below the high or low of the narrow range. Watch and learn more about candlestick pattern and analysis. The crypto market trends give some information about candlestick pattern and trade daily. Get the profit. Subscribe my channel friends. Thank you friends.